Good morning, everyone. This is the Lovewell team. This is Louise and Katie, and we have special guest today, Bill Jarvis, our wonderful loan officer. Tell us all about the good and the bad of the loan, the interest rates, and hold on to your hats. It's going to be interesting.
Thank you, Louise. Well, rates are up quite a bit. So we started the year, the interest rates were about 3%, and we've gone to a little over 5% now. We're probably at 5 1/8 today. So we're at the highest we've been on conventional loans since 2011. The last time we were really higher than this was 2008. So quite a change. That 2% translates to about a 30% higher payment on conventional loans. The FHA and VA rates are now about the same. So they've gone up even more. So those payments have gone up a little over 30% just this year on the same loan. So part of the reason for that, or one of the main reasons for that, is probably inflation. As everyone knows, everything's gone crazy. I think people thought we were going to be raising the short-term rates this year to head off inflation, and they're doing it much more quickly than people thought prior to this. A lot of that is the war, all the COVID issues, all the supply things. The government's put a ton of money in the economy, and so the Fed is going to try to raise the rates more quickly than they originally thought. And in the short term, that's while it seems like that's what's driving the mortgage rates, it's probably really more inflation. So hopefully, if the Fed can raise the rates enough and tamper down inflation, the mortgage rates will stop going up and maybe hopefully come down a little bit. Typically, when it's an interesting time because we're having this inflation and probably a recession. It seems like we're entering a recession, and a lot of people think if the Fed's able to control inflation, inflation appears to be coming down, hopefully under 5%, then mortgage rates should kind of ease back down too, even if the Fed rate remains higher. The mortgage rates and the Fed rate are two very different things. The Fed rate is a one-day overnight rate that banks lend money to the government at, and so short-term things like your home equity line, your car loans, any type of credit card debt, all that stuff, the rates are probably going to go higher. It seems like that's going to last for a while. But that doesn't necessarily mean mortgage rates are going to stay here or go much higher. Again, a lot of that depends on inflation. So if we have a lot of inflation, I think the rates will stay this high and probably go higher.
Okay.
And it's interesting that over the last several times we've had recessions, mortgage interest rates have often come down. Home values have most often gone up. Over the last 60 years, the only exception to that was 2008. And that recession may have been caused more by the housing bubble. It wasn't like there was depreciation because of a recession. There was probably a recession because of the housing bubble. And there's a lot of things that have changed since the last time. It doesn't appear, there's just so little inventory. There's so many more households. There hasn't been nearly enough building. We definitely have a housing shortage in the United States, and in this area especially, it's still really tight. Although rates have gone up, there's a lot of people still qualify for these mortgages. People will continue to qualify for these mortgages, and there's just a ton of demand still for the limited inventory we have. So I don't see that changing. So
Okay, well,
that's it.
that
So
was a mouthful.
30% higher payment, and that's just where we're at.
all right, well, we'll see how things continue to go. Thank you for joining us, Bill.
Yeah,
Thank you.
was,
Have a good
that
day.
was amazing. Thanks, Bill.
Well, if anybody has any questions, feel free to call me and see what you qualify for.
Thank you.
Thank you. Have a good day.
Thank
Bye,
you.
Bill. Thanks
Bye.
for all that.
So yeah, we're definitely seeing the market may be shifting for sure with the big change in interest rates. Already, I've been helping buyers that, 2 weeks ago, everything was getting 8 to 10 offers. And now we're looking at 2 to 3 at the most. I mean, not every home, there's every area, every home is different, but I definitely think with this trend, we may expect to see prices start to actually come down. If not, just at least level off. So it'll be interesting to see what happens in the next few months, and it will definitely, hopefully, level things off for the buyers, because it's been a really rough few months for them. So that's what we're just definitely seeing on the buying side. Competition is going down. So of course, kind of translates to the selling side. Louise, do you want to add any comments on that?
Yeah, I mean, I kind of agree with that. I've been, because there was that thing from Stephanie, the owner of our company, where some agent had they had an open house, they had a few showings, but nothing really came in. And then
they got 2 preemptive offers.
They got 2 preemptive offers, but
they countered the 2 buyers, and then the 2 buyers went away.
Right. And then I know, like Jane at the office, she had a home in Hayward, I want to say on Revere or someplace. And she only got 1 offer, but then another offer came in. So again, the number of offers is definitely waffling. And I think for us, it'll be interesting to see what happens on our listing on Atlantis, because I think we've had like about 11 to 12 showings. It'll be interesting to see if we get the 2 to 3 offers, because think about it, our last one in Hayward, it only got 3 offers. It did good. It still did really good, but it only got the 3 offers. Right.
So it'll definitely be interesting to see what happens this next month. The good time for buyers, I mean, of course, it'll increase the competition, but I have a number of buyers that are kind of sitting and waiting. And of course, they have to factor in these new interest rates and how that's going to affect what they can afford. But
I would think that would definitely slow up some of the buyers, especially in the higher end, because if you could afford a really big mortgage at the high end at 3%, if it jumps to 5%, that's a big difference in that monthly payment.
Well, I mean, it gets it to anyone. If it's a 30% difference, whether it's at the high end or the low end, I think everyone gets affected the same. I mean, it's hard for them to come up with a down payment often. And so this is, yeah, it's going to affect buyers, I think, on all ends.
Anyway, so that's the story. So I would say buyers have hope. I mean, even though it's going to cost a little bit more, I think you might not have to compete quite as much. Like Katie said, not everywhere, but I think we're definitely seeing some movement.
Yeah, and prices may start to even come down. So they've come up so fast in the past few months, so it might be ready for a change. So we'll see. Okay. So I think that's it for our update in April, and we hope everyone continues to stay well.
Happy Easter, happy Passover, happy spring, happy week.
Happy Ramadan, I think. Yeah. And yeah, everyone have a great rest of your day and month, and see you next month.
Bye, everybody.
Bye.